Okay. Now look at the another problem. Problem number 6. From the following particulars, prepare statement of profit or loss, statement of profit or loss for the year ended year ended 31st December 2012, 31st December 2012 of Mr. Ram. Okay. Ram started the business. Ram started the business on 1/1/2012 with a capital of rupees 90,000, with a capital of rupees 90,000 on 31st/12/2012. His financial position as follows. Cash rupees 30,000, bank rupees 15,000, furniture rupees 20,000, building rupees 60,000, machinery rupees 30,000, debtors rupees 5,000, and creditors rupees 10,000, creditors rupees 10,000. During the year he introduced fresh capital of rupees 25,000 and he withdraws rupees 8,000 for drawings. Okay. Now see the problem. From the following particulars, prepare statement of profit or loss for the year ended 31st/12/2012 of Mr. Ram. Yeah. Ram started business on 1/1/2012. Here the year ending 31st/12/2012. Okay, 1/1/2012 is the year starting with a capital of rupees 90,000 on 1/1/2012 with a capital of rupees 90,000. This is opening capital. This is opening capital. On 31st/12/2012, his financial position as follows. Financial position as follows: cash, bank, furniture, building, machinery, debtors, and creditors. These all are the assets and liabilities at the end of the year. At the end of the year on 31st/12/2012. With the help of these assets and liabilities, you are required to prepare statement of affairs at the end of the year. That is closing balance sheet. That is closing balance sheet. And during the year, he introduced fresh capital, rupees 25,000. This is additional capital. This is additional capital. And he withdraws rupees 8,000 for drawings. Here the drawings rupees 8,000. Okay, first of all, you are required to prepare statement of affairs. Statement of affairs. Statement of affairs. Statement of affairs of Mr. Ram. Mr. Ram for the year ended. For the year ended 31st/12/2012. Liabilities. Liabilities amount. Assets amount. Assets amount. Okay, now assets and liabilities. Here on 31st/12/2012, his financial position as follows: cash. Cash is an asset, so taken into asset side. Cash rupees 30,000. And bank balance is also an asset. Bank rupees 15,000. And furniture is also asset, taken into asset side. Furniture rupees 20,000. Next one, building. Building is also asset, taken into asset side. Building rupees 60,000. And machinery rupees 30,000. This is also asset. Machinery 30,000. Next, debtors also asset. Debtors rupees 5,000. And creditors is a liability, taken to liability side. Creditor rupees 10,000. So these are the assets and liabilities. Now take the total of the asset. Total of the asset: 5,000, 35,000, 95,000, 1,15,000, 1,30,000, 1,60,000 total. Total of the asset 1,60,000. Now that same amount taken into the liability side, 1,60,000. The difference between assets and liabilities. Now the difference between 1,60,000 and 10,000. The balancing figure is 1,50,000. This is called capital. Capital at the end of the year, 31st 2012. Capital at the end of the year. This is the closing capital. Balancing figure. This is the closing capital. Now with the base of the closing capital, you are required to prepare statement of profit or loss. Statement of profit or loss now here first of all here particulars amount okay, first of all taken into the amount of closing capital here we are calculated as rupees 1,50,000 closing capital or capital at the end of the year or capital on 31st 12 2012 capital at the end of the year capital at the end of the year 31st 12 2012 that is rupees 1,50,000 add drawings here the amount of drawings here and he withdraws rupees 8,000 for drawings. Taken into the drawings amount 8,000. Now add the drawings 1,50,000 plus 8,000 1,58,000 1,58,000. Once again, I will explain statement of profit or loss. Statement of profit or loss. Capital at the end. Capital at the end rupees 1,50,000 add drawings rupees here hey withdraw rupees 8,000 for drawings 8,000 1,50,000 plus 8,000 1,58,000 and less additional capital additional capital. Here the additional capital amount is during the year he introduced fresh capital. Fresh capital is equal to additional capital rupees 25,000. 1,58,000 minus 25,000 1,33,000 1,33,000 if 1,33,000 this amount is called adjusted capital. Now get the profit less opening capital or capital at the beginning. Capital at the beginning. See this. Ram started the business on 1/1/2012 with a capital of rupees 90,000. On 1/1/2012, this is the year starting. So this is the opening capital. The opening capital of the firm is 90,000. Opening capital rupees 90,000. So 1,33,000 minus 90,000, 43,000. This amount is profit. This amount is profit. Okay. Now, now see the another problem. Problem number 7. Problem number 7. A small difference between problem number 6 and 7. Mr. Charan started business with the following particulars. The following particulars on 1/1/2017. On 1/1/2017. These are cash in hand, rupees 12,000, furniture rupees 8,000, creditors rupees 10,000, plant rupees 20,000, debtors rupees 15,000, and buildings rupees 80,000. These all are the assets and liabilities at the beginning of the year of Mr. Charan, and on 31/12/2017, his financial position as follows. That is, cash rupees 20,000, bank overdraft bank overdraft rupees 10,000, bank overdraft rupees 10,000, debtors rupees 20,000, furniture rupees 8,000, plant rupees 20,000, building rupees 80,000, and creditors rupees 6,000, These are the assets and liabilities of at the end of the year. Now, you are required to prepare profit or loss for the year ending, and drawings during the year rupees 12,000. Okay, this is the problem. In this problem, now you are required to prepare profit or loss. Here, closing capital or opening capital are not given in this sum. Opening capital and also closing capital are not given in this sum. But here, in the year starting, the assets and liabilities are there. With the base of these assets and liabilities, you are prepare statement of affairs at the beginning of the year. Now you will get this statement, opening capital, statement of affairs. Statement of affairs on 1/1/2017. Statement of affairs on 1/1/2017. With the help of this statement, you are calculate opening capital. Liabilities, amount, assets, amount. Okay. Now, see this. Mr. Charan started business with the following particulars on 1/1/2017. 1/1/2017. Cash in hand, furniture, creditors, plant, debtors, and buildings. These are the assets and liabilities of the beginning of the year. So you are prepared statement of affairs on 1/1/2007. With the help of this statement, you are calculate opening capital. Okay. Now the asset side. Okay, cash in hand. Cash in hand is an asset. So taken into asset side. Cash in hand. rupees 12,000. And furniture, this is also asset. Furniture, rupees 8,000. And creditors, rupees 10,000. Creditors. So creditors is a liability. Creditors is a liability taken into liability side. Creditor, rupees 10,000. Rupees 10,000. And plant is an asset. Plant, rupees 20,000. And debtors, this is also asset. Debtors, rupees 15,000. Okay, 15,000. And building also asset. Building, rupees 80,000. Rupees 80,000. Okay, these are the assets and liabilities. Now take the total and find the difference. The total and find the difference. The total 1,35,000. Total is 1,35,000. Taken into the same amount here. The difference between assets and liabilities, that is 1,35,000 minus 10,000, that's equal to 1,25,000. 1,25,000. This is the balancing figure or capital at the beginning. Capital at the beginning. Balancing figure. Okay, this is opening capital. This is opening capital, and also you are calculate closing capital. Same another statement. Statement of affairs. Statement of on 31st/12/2017. So follow the same procedure. Okay, here liabilities, amount, and assets amount. Assets amount. Okay. Here you are required to take in the amounts of 31st/12/2017. Here the amounts of 31st/2017, 31st/12/2017 is financial position. The amounts, cash 20,000. Cash is an asset, so taken into asset side. Cash rupees 20,000. Cash rupees 20,000. And bank overdraft. Bank overdraft is liability. Bank overdraft is liability. So taken into liability side. Bank overdraft. Bank overdraft, rupees 10,000. Okay, next. Debtors. Debtors is an asset. So taken into asset side. Debtors, rupees 20,000. Next, furniture also asset. Furniture also asset. 8,000. And plant is also asset. Also an asset. Plant. Plant, rupees 20,000. Next one, building. Building is also an asset, rupees 80,000. Building, rupees 80,000. And the last one, creditors. Creditors is a liability. Take it to liability side. Creditors, rupees 6,000. Okay. Now take the total and the balance. Total 1,48,000. 1,48,000. Same total taken into here 1 lakh 48,000. The difference between assets and liabilities. Asset total 1 lakh 48,000 and minus liabilities total 16,000. 1 lakh 48,000 minus 16,000, that is 1 lakh 32,000. This is the capital at the end. Capital at the end on 31st/12/2017. This is closing capital and this is opening capital, and here you are required to prepare profit or loss for the year ended. Okay. Drawings during the year 12,000. Here drawings 12,000. Closing capital here, okay, and opening capital, and you know the drawings. Now you are prepare the statement of profit or loss. Statement of profit or loss. Profit or loss for the year ended 31st/12/2017. 31st/12/2017. Here particulars amount. Okay. Here we taken the closing capital or capital at the end of the year. Here capital at the end of the year rupees 1 lakh 32,000. Capital at the end 31st/12/2017 rupees 1 lakh 32,000. Rupees 1 lakh 32,000. Add drawings. Here the drawings rupees 8,000. Drawings rupees 8,000 or 12,000. Rupees 8,000. Total 1 lakh 40,000 less additional capital. In this problem, no additional capital. Are given. So less additional capital. So dash 1,40,000 as adjusted capital. This is adjusted capital. Now less the opening capital or capital at the beginning. Opening capital at the beginning rupees 1 lakh 25,000. 1 lakh 25,000. The difference between these two rupees 15,000 or 1 lakh 45,000 minus 1 lakh 25,000 is equal to 15,000. This is profit. Okay. Let us see another problem in singularity system. That is problem number 8. From the following particulars, prepare profit or loss for the year ended 31st/12/2014. 31st/12/2014. The following particulars are there. That is cash in the beginning of the year, in the ending of the year, at the beginning, at the ending. These all are opening balances, these all are closing balances. Beginning of the year and ending of the year. Assets and liabilities. Okay, cash asset beginning 4,000, ending 3,000. Bank asset beginning 10,000, closing 5,000. Bank credit balance means overdraft. Credit balance means overdraft. This is liability. Bank balance asset. Bank credit balance means overdraft balance. So this is liability. This is shown in the liability side. Next, debtors asset 80,000, 75,000. Stock is an asset 30,000, 28,000, and creditors is a liability. Creditors is a liability. Opening 42,000, closing 37,000. Alage machinery is an asset. Machinery is an asset. Opening 10,000, closing 15,000. Furniture is an asset. Furniture is also asset. This is also shown in the asset side. Okay. The proprietor at rupees 750 per month. Proprietor at rupees 750 per month withdraws. Withdraws at rupees 750 per month. This is drawings. This is drawings. He introduced 3,000 as fresh capital. Fresh capital means additional capital. Fresh capital means additional capital. Here you are required to prepare opening balance sheet, closing balance sheet, and statement of profit or loss. Opening balance in opening balance sheet you are calculate opening capital, and in closing balance sheet, that is statement of affairs at the end of the year. You are get from this, you are calculated closing capital and find out the profit in statement of profit or loss. Now statement of affairs on 1/1/2014. Statement of affairs on 1/1/2014. Liabilities. Liabilities, amount, assets, amount. Okay, opening balance. Here we take only opening balances. Okay, cash, asset, right in the asset side. Cash, rupees 4,000. Okay, next, bank. Bank is an asset, right in the asset side. Rupees 10,000. Debtors also asset. Debtors rupees 80,000. Debtors rupees 80,000. Next, stock is an asset. Stock rupees 30,000. 30,000. And creditors is a liability. It is shown in the liability side. This is shown in the liability side. Creditors. Creditors rupees 42,000. 42,000. Next, machinery is an asset. Shown in the asset side. Machinery rupees 10,000. And last one, furniture is also asset. Furniture rupees 1,000. Now take the total and get the difference. Total amount in asset side 1,35,000. Total of the assets 1,35,000. 40, 120, 130, 1,35,000. Same in the liability side. The difference between assets and liabilities, rupees 1,35,000 minus 42,000. 1,35,000 minus 42,000. Difference 93,000. 93,000. This difference is called opening capital. On 1/1/2014, this is called opening capital. And in the same way, prepare statement of affairs. Statement of affairs on 31st/12/2014. 31st/12/2014. The statement of affairs is nothing but closing balance sheet. Yeah, liabilities, amount, assets, amount. Liabilities, amount, assets, amount. Okay. Statement of affairs on 31st/12/2014. Here we take the ending amounts at the end of the year. These are the amounts, assets and liabilities. First one, cash, asset. Cash is an asset. Right in the asset side, cash, rupees 3,000. Okay, next one, bank, 5,000. Credit balance means overdraft balance. Overdraft is a liability, so this is right in the liability side. Bank overdraft. Bank overdraft, rupees 5,000. Next, debtors is an asset, 75,000. Rupees 75,000. Stock is an asset, 28,000. Stock, 28,000. Next, creditors is a liability. Creditors is a liability taken into liability side. This is rupees 37,000. Creditors rupees 37,000. Okay, next, machinery is an asset. Machinery is an asset taken into asset side. Machinery 15,000. Okay, last one, furniture is also asset. Furniture rupees 1,000. Okay, now take the total of the assets. 1,22,000. 1,22,000, 6, 14, 19, 22, 2, 3, 1,22,000. Take the same amount here. The difference between assets and liabilities, that means 1,22,000 minus 42,000. The difference 80,000. 1,22,000 minus these two. Total 42,000. 1,22,000 minus 42,000, 80,000 balancing figure. This is capital. On 31st/12/2014. That means closing capital or capital at the end of the year. Here, capital on 1/1/2014. Capital at the beginning or opening capital, this is. And now we have prepared another statement of profit or loss. Statement of profit or loss for the year ended. For the year and 31st 12 2014. Particulars. Amount. Here we take the, first of all take closing capital. Capital on 31st 12 2014 rupees. Capital on 31st 12 2014 rupees 80,000. Rupees 80,000. Add drawings. Here the drawings, the proprietor withdrawn rupees 750 per month. Withdrawn 750 per month. These are the drawings. 750 into 12. 750 per month. So 750 into 12. Yearly 9,000. 750 into 12. 9,000. 80,000 plus 9,000 is equal to 89,000 less additional capital. Here the additional capital is, he introduced 3,000 as fresh capital. Fresh capital is equal to additional capital. So the additional capital rupees 3,000. 89,000 minus 3,000, 86,000. This amount is called adjusted capital. Adjusted capital 86,000. Now less the amount of opening capital or capital on 1/1/2014. Capital on 1/1/2014 or capital at the beginning. The amount is rupees 93,000. 93,000. Adjusted capital minus the capital on 1/1/2014. This is the minus balance. That is rupees 7,000. Rupees 7,000. This is called loss. Minus balance means loss. Okay.